As earnings season gets underway, are the markets going to try to bottom? That's coming up on 3 Minutes on Markets and Money. Earnings season gets firmly underway today as we really start to see a bulk of the S&P 500 reporting here over the next couple of weeks. The big question is, have analysts brought down estimates enough? Or are there going to be more disappointments this season than usual? And more importantly, what are the outlooks going to be from these companies? That's going to be a big driver of prices here over the course of the next couple of weeks. Now, this morning, markets are starting off on the upside here, and that's good news after Friday's rally. There are a couple of good bullish indications here that are going on that we want to pay attention to. The first is that markets have been in a very defined downtrend really ever since the peak of March. This downtrend channel has really pretty much combined every peak and rally that we've had in this market going back to March. Markets rallied up to the top of that downtrend channel on Friday, look to be moving above that today. So again, can the markets break out of this downtrend channel and make a move higher? Hopefully that'll be the case. Now, immediately, as soon as we break out of this downtrend channel, we're going to hit the 50-day moving average. That's going to be pretty important resistance here. The 50-day moving average has also contained this entire downtrend move in the market so far. So again, immediately here, markets are going to be contending with a good bit of overhead resistance. Now, the good news is that we are on a MACD buy signal and we're not overbought yet. So again, markets have some room to move higher here because we're not overbought. There's some buying pressure coming in. Haven't seen that in a while. And importantly, the market has continued to base here over the course of the last several weeks. So we've been putting in a very nice base to this market that is giving this market some ability to rally and move higher here. One thing that's been very elusive this year has been a good kind of counter trend rally to kind of suck the bulls back into the markets. That may be something we're developing here. Again, if earnings come in a little bit better or even just in line with expectations, if guidance isn't terrible, we could see this market actually muster a fairly strong counter trend rally. Again, something we haven't seen in a while, but again, with everything so negative, sentiment's very negative, position remains negative, investors are very negative, that provides that fuel for that lift to the markets that we've been talking about. Again, putting about 4,200 as a target on this rally, that would not be out of the realm of normality. Still being a long-term downtrend doesn't necessarily mean we're out of the woods in terms of a bear market. That still has some more work to do as earnings do come down for the rest of this year. Got some more work to do there. But again, use this rally opportunity here if you need to rebalance portfolios, rebalance risk in portfolios, etc. That's going to be the opportunity to do that. If you haven't liked the action so far this year, looks like we're going to be set up here for at least an opportunity to take advantage of a rally. I'm your host, Lance Roberts, for 3 Minutes of Markets and Money. See you back here tomorrow.